The Singapore Exchange introduced Bitcoin and Ethereum perpetual futures recently. What are perpetual futures? You may have heard of them in the traditional finance sense, but what does it mean when it's in the crypto sense? Let's find out. Futures are a contract where a buyer or a seller has to deliver or purchase an asset at a predetermined time at a predetermined price. Imagine you're Singapore Airlines and you need to buy jet fuel for your planes next month. You go to the supplier and you tell them, I want it at a certain price because I think the prices of jet fuel are going to go up. Supplier is happy to deliver because he thinks the prices are going to go down. So this is how a futures contract is put together. Perpetuals or perps differ from regular futures because there's no expiration date, no need to own the underlying asset, nor any need to deliver it. Well, they use this thing called a funding rate mechanism to make sure the perps price doesn't stray away too much from the underlying security's price. So the payments formula for the funding mechanism sometimes includes a cap or a floor for a maximum or minimum funding rate. The perps on the SGX will be limited to institutional, accredited, and expert investors. Retail involvement will not be allowed because the MAS has on its website described cryptocurrencies as highly hazardous for retail investors. Perps had a daily average volume of 187 billion US dollars, and the epicenter of that growth is in Asia, but a lot of it is offshore. SGX launching these perps means it can bring some of those volumes onshore and boost its market as well. I spoke to the head of country for Coinbase Singapore, Hassan Ahmed, who theorized that this might be a good way for SGX to boost the ailing exchange. SGX this year has rolled out a few measures already to try and boost liquidity and interest in the market. This might be a very interesting time for perps to launch because Bitcoin's 2025 gains have all been wiped out. Ahmed believes that launching the perps at a time where it's a downturn in Bitcoin gives institutions a chance to see this as valid risk management tools rather than just pure speculative toys. Now, crypto has always seemed like a risky asset to invest in, but believe it or not, Bitcoin's volatility has actually come down. During the Fed rate cut situation, Bitcoin's volatility was actually lower than every single company than on the Nasdaq 100 index. The US has actually begun drawing a lot of that crypto trading volume away with the Genius Act at the start of the year. This threatens the ascendancy of established regulators such as in Singapore, where they have been regulating digital assets for many years already. The launch of perps on the SGX and these other exchanges is proof that digital assets are maturing and becoming more viable investments. Read my full story on the Business Times to find out more.